whole system would blow up. I mean, because it would then realize that we've been lied to all along, and then has everything else been a lie too? So God help us if it's not there. Gold would go to the moon immediately. It would be a very big problem. Gold would go parabolic.
What if the Treasury's 261 million ounces of gold that they say they have isn't really there?
The idea that he could put 8,132 tons of U.S. Treasury gold into this new sovereign wealth fund for whatever purpose, I mean, I don't know where he's coming from on this, is a complete nonsense because it's not there.
In today's news recap, what is the performance of gold telling us? The price of gold exceeded $2,900 an ounce last week for the first time. Since October 2023, it has risen by more than $1,000 an ounce. The price is 3 times higher than it was a decade ago. It has grown tenfold since 2000. What is going on? Where does it go from here? And how best to invest? Gold should not really be this high. Traditionally, the precious metal performs badly when interest rates rise. That is because, unlike bonds, shares, cash, or property, it does not pay investors an income. When the yields on those other assets are attractive, there is less incentive to hold the barbarous relic, as the economist John Maynard Keynes called gold. That is the case today, but still gold is hitting new records. The gold price should also prefer a weak dollar. The metal is denominated in the U.S. currency. When other currencies are strong versus the dollar, they can buy more gold. When they are weak against the greenback, they can buy less, and so the price should fall. Today's Trump-fueled strong dollar should be a headwind for the gold price. Clearly, it is not. So the performance of gold is telling us something else. The message it sends is that all is not well with the world. It says that investors are worried, and history shows that it is unwise to ignore the signals that gold sends at times of stress. So why is gold so strong today? Several reasons. The first is gold's perceived safe haven qualities when the world looks uncertain. The election of Donald Trump has massively increased the unpredictability of U.S. policy on many fronts, but notably on trade and tariffs. At the same time, gold is a hedge against inflation. Many Trump policies, not just tariffs, are likely to be inflationary. It is a perfect storm for gold. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Talking about the divergence between spot, London spot, and New York delivery, and it's pretty sizable. It was bigger. It was at one point, I think it was about $80, but right now, last I looked, the London spot future in gold was about $25 lower than it is in New York futures, and I looked at it this morning, and it was like 29.27 in London and 29.51 in New York in terms of futures prices. That's almost a $25 spread. But we're seeing the same thing with silver too, interestingly. Earlier today, the London spot price was 32.74, and the New York futures price 33.38. That's a 64-cent spread. It's becoming, I think, a little bit more obvious what's going on here, and I don't know how easy we're going to see bars continue to flow this way under the guise of tariffs. But we're not seeing bars being repatriated for tariffs. These bars are being reshored. We're restocking the coffers. I don't believe that it would be, if it's coming from London, they're not doing it to preempt the audit at Fort Knox, because they would be 400-ounce bars that would be coming from London. They would have to go by way of a refining, either to the Royal Canadian Mint, but more than likely to Switzerland, and they would come in the form of 100-ounce bars. We're also repatriating them from other parts of the Orient and all around the world. We're bringing in as much as we can. In fact, we've become net importers, as we've talked about. But really what we see, in my opinion, is we will begin to see investors or big players begin to lose confidence in the paper gold markets. Maybe we're already seeing that, where, there's 3 or 4 or 5 or however many contracts issued per bar. And I think what people are realizing is that physical possession is very important right now. And this could very quickly push prices considerably higher as there is a scramble for physical. And it could put some of these banks, these clearing banks or bullion banks, to the brink of collapse or default. This is an existential threat to these banks, which in my mind would trigger a cascading event. Obviously, it would jeopardize the LBMA's ability to settle contracts, but at T plus 8 weeks right now, you could argue it already is a default. And this is the largest over-the-counter market in the world for gold. Most of the transactions there are settled in paper rather than physical, but now we're beginning to see a cascade of delivery demands, which very quickly can expose the whole system.
Fascinating situation. And I've listened to all the commentary, and yesterday I listened to a conversation between various members, sort of researchers and analysts and so on, of LBMA firms, and they were saying, well, there's plenty of gold. I mean, they were just sort of glossing over the thing, really. But really? Nobody mentioned one thing which I've been monitoring, and that is the stands to delivery. Basically, what a stand to delivery is basically where the credit market meets the road of reality, if you like. But because COMEX is run by banks, in effect, who deal in credit, not in physical, they basically, when you stand for delivery, you're not actually getting delivery. What you're getting is a commitment from the counterparty, if you like, on the transaction to deliver you gold at some stage. Now, what they do is they delay the delivery. There was a fascinating article by a guy who used to work for Sprott, and he wrote about trying to get delivery of silver out of COMEX. And basically, he said that a 5-day settlement took 9 months.
Wow,
9 months, and that was with Sprott badgering as hard as they could, trying to find out this. Where is it? The whole thing. Eventually, it was delivered in 9 months. Now, the reason this is important is because stands to delivery have been increasing quite substantially. I mean, if you look at last year, just looking at gold, I took out the figures. The stands for delivery last year were 491.2 tons. Now, basically, this year, that has accelerated. So far this year, 285.3 tons have been stood for delivery.
In today's news recap, Morgan Stanley says this key factor pushing gold to record highs is now the single biggest risk. Morgan Stanley said the main driver of gold's epic bull run since 2022 is central bank buying, but this could reverse on one risk factor. Gold's record-thumping bull run could be about to reverse if U.S. President Trump forces Ukraine and Russia into a peace deal that heals geopolitical divisions and caps surging demand for the precious metal from major central banks. That's the view of Morgan Stanley strategists in a February 14th research note that said an end to the Ukraine war is the #1 downside risk to gold, which could send it 17% lower to $2,400 an ounce in a bear case scenario. Gold is up more than 50% since the Ukraine war escalated in 2022, but lost 1.5% on February 14th to $2,880 an ounce on news reports. Presidents Trump and Putin spoke late last week about the conflict. Morgan Stanley said fast-changing geopolitics make it difficult to explain the magnitude of gold price moves using traditional approaches hot. However, its base case forecast is that gold hovers around $2,850 an ounce in the July quarter, with potential for U.S. trade wars to push it over $3,000 an ounce in the short term. The bank's bear case of $2,400 per ounce revolves around the thesis that major central banks across the emerging world in particular will slow their purchases of the precious metal if they believe the risk of sustained conflict between the U.S. alliance and Russia eases. In the final quarter of 2024, central bank purchases jumped 54% on the corresponding quarter in 2023, as other worries around U.S. fiscal deficits, money printing, and debt encourage nations such as China, India, Poland, Brazil, and Turkey to seek alternatives to U.S. dollar exposure. The strategists also said that real U.S. yields, measured as the yield on 10-year treasuries minus inflation rates, had eased since January in a move that should support gold prices. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps, and check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
I own an inflation hedged ETF, which has a lot of land in it that produces real assets, not real estate. So you think about gold mines and agricultural commodities, you think about energy, natural gas, oil. Then that's a wonderful hedge against inflation. But I want to, if you don't mind me taking a minute talking about gold. You know, there's a lot of reasons why gold should not be at record highs. We're keep bouncing our nose against $3,000 an ounce. And you think about it, well, we're talking about interest rates. Well, interest rates, nominally speaking, have stopped going down. They're now headed higher. The dollar has been extremely strong. Bitcoin, there's an obsessive compulsive nature in the media and even in the administration about Bitcoin. I don't understand it, but that's stealing a lot of gold's thunder. Peace is supposedly breaking out all over the world, right? Ukraine, Russia, Gaza. Well, thank God for that. I hope it's true. You have the Doge boys, or actually it's just now one, in DC, supposedly cutting out waste and fraud and abuse. So that's also very positive for our fiscal agenda going forward. So that should be negative to gold. So it just bothers me a lot that gold just can't go down. Have you noticed lately that the dollar goes up, gold goes up, interest rates go up, gold goes up, no matter what happens? Peace breaks out in the Middle East and in Russia and Ukraine, and gold goes up. Well, why is that? And I have a theory. I don't know if it's really. I have a theory that something's going on, and I've heard stories about a lot of gold coming into this country from overseas. Here's a theory for you, and it's not mine. I didn't come up with it myself, but I've used my 34 years of experience in this business to analyze it. And I kind of believe it might have some credence. What if, Donegan, the Treasury's 261 million ounces of gold that they say they have isn't really there? And you have a new sheriff in town who's prone to doing a lot of audits of things like the Fed, maybe even the audit of the Treasury. What if they're scrambling? What if they, being the United States government now, is scrambling to buy gold to replace what they've already loaned out or hypothecated or never had, those 261 million ounces of gold? That makes some sense to me. Because there's something else going on. It isn't a recession. It isn't a crashing dollar. It isn't a crashing economy. It isn't a crashing stock market. It isn't falling, plunging real interest rates. What is it? Why is gold where it is? You could explain some of it with inflation, but I think there's something else going on there, and I think what I've just mentioned could be a reason.
And that's Alistair Macleod's take on the evolving role of gold and the BRICS nations' ambitious plans to challenge the global financial order. What do you think? Do the BRICS nations' master plan for a gold-linked system hold the potential to reshape the global economy, or are the obstacles too great? Let us know your thoughts in the comments below, and don't forget to like and subscribe for more daily recaps. Now watch this video right here because it's a perfect fit for you. I'll see you on the other side.